Hello and Assalamualaikum. What is remittance? Remittance is a sum of money sent in payment for something, or it is the transfer of funds done in banking system. Method of remittance have six: cashier order, banker's check, demand draft, telegraphic transfer, mail transfer, online transfer, and standing instructions. In this video about demand draft. What is demand draft? A demand draft is a method used by an individual to make a transfer payment from one bank account to another. Demand drafts differ from regular normal check in that they do not require signature to be cashed. This is an example of demand draft. A demand draft is a way to indicate a bank transfer that does not require a signature as the case with a check. A demand draft is a prepaid instrument, therefore you cannot stop payment on the case of fault of misindebted receipt. Because demand draft can be used to defraud people, there are regulations now in place that allow victims to recover funds from the holding bank. Demand draft versus check. A demand draft is issued by a bank while a check is issued by an individual. Also, a demand draft is drawn by an employee of a bank while a check is drawn by a customer of a bank. Payment of demand draft may not be stopped by the drawer as it may with a check. A check can be hand delivered. This is not the case with the demand draft. The draft may be drawn regardless of whether an individual holds an account at the bank while a check may be written only by an account holder. What is a characteristic of a demand draft? It is issued by the bank to another bank. It is considered to be a prepaid negotiable instrument because the money is taken from the drawer account when it is issued. Therefore, when the payee cashier is out, it will not bounce to the insufficient funds since the payment is already made by drawer. As a result, it is more secure and comes with less risk compared to a check. It is only payable to the payee written on the demand draft. It is payable on demand. It means the payee can immediately be paid the specific amount and cannot be stopped from payment once he presents it to the bank to be cashed out. Require the use of the signature to authorize the transfer of the funds. It can be authorized remotely by fax, phones, or online. Type of demand draft. Side demand draft is payable immediately and it is often used when the purchasing goods internationally. For example, when a seller ships goods to a buyer, the seller still processes the title of the goods until the buyer receives the goods. How do you get a demand draft? You can visit your bank or fill out an online application offered by your bank. You need to provide details such as your bank account information, the full name of the payee, and the address of the payee bank. You also need to provide the amount of money, the currency of the money, the reason for payment, and instruction about whether the bank should send it to you or direct to the payee. When is a demand draft used? A demand draft can be used when you purchase items online or over the phone. It can also be used when there are recurring debits from your bank account such as bills. The common use include return item fees, customer payments made remotely from the company, the transfer payment between different bank accounts. Therefore, demand draft can usually be accepted by the telemarketers, utility company, credit card company, and insurance agency. How long does demand draft clearance take? Time frame or the clearance time of the DD varies between banks. They are usually cleared within half an hour or by the end of the working day. Some banks can take up to 3 working days. Also, if the DD is for a large amount, it will only be credited to the bank account and not provided as cash. How to cancel a demand draft? Once the DD is issued by the bank after you paid by cash or by deducting the amount from your account, if they need a register for the cancellation of the DD, visit the bank from which the draft was issued. You may have to write an application addressing the bank or branch starting the unit for the cancellation. Type of demand draft cancellation processes. Demand draft issued upon paying cash. If the DD was issued based on cash payment, you will have to submit the demand draft along with the receipt of the cash payment. Demand draft issued upon amount deducted from your account. You will need to fill the DD cancellation form to submit it along with the original DD. The amount will be credited into your account after the bank deducts the cancellation charge. What is the foreign draft? Is an alternative to foreign currency when dealing with international trade or finance. A foreign draft is essentially a bank draft is the draft on a financial institution in the non-home country of the currency need. This can be purchased at commercial bank and usually come with a fee depending on the institution and the type of account you hold. A foreign draft is a bank draft established at the foreign bank in order to pay transaction in the foreign currency. Because the need to purchase foreign currency or voluntary information required for an international wire. Foreign draft comes with the fees that must be paid to the foreign bank. I choose Bank of China. Bank of China demand draft. An economical way to remit funds to the beneficiary. A demand draft can be deposited into the beneficiary bank account or encashed over the BOCM countries immediately. Eligible applicants: all Malaysian citizens, permanent residents, and foreigners aged 18 years and above. Foreigners must hold valid work permit. Application requirements: all BOCM deposit account holder who pay by cash are to provide their valid identification creditors. Provide supporting document for remittance amount more than 10,000 ringgit Malaysia equivalent. Information required: beneficiary's name, fees and charge. As you can see, Bank of China artwork demand draft. Inward remittance of the Bank of China.